Ashish with Investor Family CPA. Today's topic is how short-term rental and long-term rentals are different and how do they help you save taxes differently because they are treated differently from IRS. So before I move on to the detail, I want to show you how real estate first saves you taxes. Then we will talk about how are they different and what you should think about. Okay. So let me share my screen and then we'll go from here. Everyone has seen this before, this tax planning module we have. Let's say you live in Colorado, you have, both of you and your spouse make $200,000, so your AGI is $400,000. That's your AGI. Ignore everything, okay? Ignore all the details here. Our tax planning is complicated. Don't worry, don't think anything other than what I'm saying to you. Now you'll see if you make that amount of money, you'll pay around $93,000 in taxes. How can real estate help you save taxes is what I'm going to show you next. This taxpayer with $373,000 AGI will pay $92,000 in taxes. We talk about this. But in 2024, if you plan correctly and meet all the requirements, you can save significant amount on taxes. How much? Let's see. If you buy almost 2.4 or $2.5 million property that I'm showing on screen, you're paying zero tax, meaning you're completely offsetting your W-2 income with real estate and saving $92,000 in taxes. Meaning, when you go file your taxes, rather than paying $93,000 in taxes, you only pay, you're not paying anything. You're paying $1,300 in taxes. Maybe that's another. This is a Medicare tax. Okay, ignore that. You're paying zero taxes, basically. How can you make that happen with real estate? It's what I'm going to talk about next with short-term rental and long-term rental. Now, I just want to show you something. Do you see this $2.4 million in 2024? If you had invested in real estate in 2022, that threshold was only 1.4, almost half, right? The 1.4 would have saved you $92,000. That is why it's important to understand this and invest as soon as possible. Next year is also a good year when the Trump takes the office and maybe bringing back 100% bonus depreciation. Now, if you don't understand what I'm saying, it's okay. Just focus on how real estate saves you taxes and how short-term rental and long-term rentals are different. So I'm going to go to the next module and talk about how are they different. Both of short-term, this is short-term rental and long-term rental. Short-term rental and long-term rental, both of them are real estate investments, right? But how they save you taxes are completely different. Long-term rentals, and everyone knows about this, the rentals, I just showed you, it can create a huge loss and then save you that $92,000. I'm not going into details of how to do that. I'm just trying to show you how they are different. Long-term rentals, all the losses that is created can offset your non-passive income, meaning your W-2 and business income, but you need to have something called real estate professional status. So how to get real estate professional status, that's a whole different topic. But once you get that status and meet the material participation rule, then that rep status can offset your W-2 income, just like I showed you before. It's much harder to meet, especially when if you're a W-2 employee or if you have a bunch of other businesses you're involved. But short-term rental are different. Short-term rentals, even though it's real estate from traditional sense, investment sense, but you will just have to do this. You just have to buy the property. The losses that created, just like long-term rental, will offset your W-2 income, just like long-term rental, without the rep status, real estate professional status. You just have to meet something called material participation rule. Material participation rules are not that complicated. Okay, I can show you the rules around that. You have to meet certain requirements. When you meet those certain requirements, one of the 7 tests, you're done. Material participation is easy to meet versus real estate professional status. Okay, so let me show you what the material participation requirements are and how can you meet them really quick so that you understand how short-term rental can save you taxes. This is what you see in my screen is material participation test. We have 7 tests. These three are the ones that you're going to focus on. One of the tests says substantially all participation tests, meaning if there is no one involved in the activity, let's say you buy a short-term rental, if there's no one involved, you're the only one managing the property, you made the rule. It's like opening up a food truck. You open up a food truck, you go and manage a food truck, you sell food from there, you made the rule. On the other side, real estate professional status is complicated. You being a full-time employee, if you work 2,000 hours in your W-2, you have to work another 2,000 hours in real estate. Impossible sometimes for a full-time employee, almost impossible. So the reason, I know I don't want to complicate this, all I want to tell you here is short-term rental loophole, that's what they call it, loophole right now, is very popular nowadays. You just have to meet the requirements, and then it can completely offset your W-2 income if you meet all the rules, and then it can save you $92,000 on taxes, which I just showed you. So just to recap, okay, I know it is a complicated topic. All I want you guys to understand is this. Investing in real estate can save you a lot of taxes. You need to follow all the rules. Real estate professional status with long-term rental can save you taxes, but the rules are complicated. You might not meet the requirement. Short-term rentals are easy to meet, and then you can also do the same tax savings without all these complicated rules. So look into that, and then get back to us with questions. We can help you. Follow us more for the similar videos, and then we'll catch up with the next one. Thank you very much. Thank you for being part of this video. I hope it was helpful. Please subscribe for future tips. See you again.